All right, so what I'm gonna do right now is go through yesterday's trade. So what I'm gonna do is come off the replay. As you saw, we just did that video. So now let's get off of the replay mode and go into yesterday's trade, which I think was right here, yes, Wednesday. And we're going, this is before the collapse of the market. So what I'm gonna do is do the replay just to show you how you could have gotten into it. Because remember, it's fractal, it happens over and over, and it's the same concept, same thing, as you saw in the video just now, right? Here's your high, comes down, you just want to see a trade through that, you trade through that, and then you take a L. You cannot dodge L's. You have to lose inside of the market. That's actually very healthy, and it's a good thing to think about. You have to lose in the market for you to gain big. And the whole idea is for you to actually see, hold on, let me see. Yeah, the idea is for you to actually see how the market works. Then you can find out when or where is the best place to get into the market so that it can work out for you, right? It's not for you to win 100% of the time. You'll never have that. Even if you win 80% of the time, that does not mean you're profitable. You can have a 30 to even 40 to even 20% win rate, but you are the most profitable over time. So with that being said, and with that being known, as you can see, this is your high, this is your low. You want price to push up through here, because on a daily chart, so we're looking at targets right now, right? Very simple. As you can see, even right here, your target from here, and then it came down. Now once it starts to break structures to go up, meaning as soon as you see this, you're starting to look for trades to push up. So you start to scale down to the lower time frames to get into the tighter entries. That's all it is. So now, as you can see, this is live price. Oh, well, no, it's not live price yet. I just cut off to Wednesday, right? But this is pretty much right where it is because it's only one day after. I'm looking at the target top for gold to be up here. This is how gold has been trending for the longest time. And we are looking for gold to surpass all of this. Gold came up here, made a high, came down, made another high, but failed. So it broke back down. So what we're actually supposed to be looking for is a sell to come through the bottom right here. Pause. But yes, you're actually looking for that. But based on the trend, and you see price taking highs and stuff like that, you'll see the tendency for price to break down and then break back up. This is that same thing, break down, like past the low. So this is what you'd be looking for if you were going to be selling. That's what you'd be looking for. So a break lower, price comes up, and then price to come back lower. So reality speaking, this was your first break lower, and what we're supposed to be doing now is waiting for price to come back to come here as a liquidity target bottom, as it is right here, same way too. But again, now if you go up to a monthly chart now and see what your higher time frame is doing, this is what I just did for you guys. So let me actually just erase all of this so it doesn't get confusing. Liquidity target, boom, bam. Yeah, and then as you can see on the monthly chart, you're still extremely bullish. So why would you ever think to be selling right now? So liquidity target top. So we're still bullish, fully bullish. Like you draw out this entire zone from that high to the low. We're fully bullish. This is a zone right here. This is a demand zone right here. If price even comes down here for the next couple months, you can expect price to come back up and then shoot past this and go straight up to even roughly all $3,000. You know what I mean? And you can, this video will age like fine wine, because that's more than likely what will happen. In order for price to go bearish right now, really and truly gold, it would have to break this low right here, come up, and then break another low right there to go down, because that's how the market moves, market mechanics, the trends, So anyways, back to this, we see the monthly is still pushing up. So this is just as simple as price pushing down and then pushing back up. This can extend up to, what's this price right now? This can extend up to 28.68 right now. So we're back on the daily, because now we want to see price do that. A part of my MAs, I see price closed above my MAs. My MAs never cross. I'll show you about that. And from here, I know I'm bullish, obviously. So since I know that I'm bullish, I'm down on the 1 hour chart now, looking at this. So this is Wednesday, right? This is all starting from, yeah, baby. Starting from, yes, baby. What happened? Oh, okay. Go ahead, okay? Daddy coming, okay? Go ahead, watch cartoon. Daddy doing a video. When daddy finish, daddy gonna come to you, okay? All right, Bubba, go ahead. I soon come. So starting on Wednesday is right here, right? So now we looking, but you wouldn't be trading this 1 o'clock, 5 o'clock in the morning. So let's say 8 o'clock in the morning or 7 o'clock, 7, 8. This is when time we were watching gold, right? You already know now that the trend is bullish. So now if we scale down, remember that first breaker structure came from right here now. So even if you want to look on it like this and say that was a demand zone, and that's the high that the first high that it broke, because you see where price came up, came back down. On a 1 minute chart, this is what you'd be looking at. Yo, evident, right? It's starting to be clear. Well, hopefully. If not, then I still obviously in here to show you. So once price break this, then you starting to look for what you want to look for. So how I would be looking on this is price come up, come back down. You're just making it play out right there. Now this is 8 o'clock in the morning, as you can see. So we're here waiting. Me, I would probably start like 8:30, 9 o'clock. So like 8:30, 9 o'clock is when the market actually open, right? So like this, now this is the reason why this candle is like this, because it's more volatile. And this right here was to wipe out people who are in the previous buys from earlier, right? Cool. I see price come up, and then from here, remember, I'm waiting on it to close above my MAs. So from it close right here, that is when I'm ready and active to do what? Aim for my liquidity target top. That is my target. And on a higher time frame, I obviously know that my 1 hour is my target top, so it's way up here, right? So that's how I would be looking at the markets to get into this. So from I see it close right there, and I see, remember, what we're looking for is the high and the low to be produced, and then it to trade through the high. What I just did here with this white one here, which is the same high, low, and then trade through the high, guess what? On a 1 minute chart, because remember, the previous video you saw 1 month, 1 hour, 1 day. It's all the same. It doesn't matter. The time frame does not matter. It's all the same. Close right here, high, low. This traded through that high. And how an easy way for you to understand where the highs are, you'll see a gap from that. So this is where that high came, and from you see a candle stop and it doesn't go through that high, the next one you can definitely go through that one if you wanted to. That's fully legal, because that's exactly what the market does. Let me find a very simple example of a bounce and go type of thing. Oh, here it is. So here's this. It closed, went down, didn't pass this high. Right? Yeah, baby. Okay, take a shot. Go ahead, Bubba. Yeah, man. Okay, no problem. So you see it bounce that. All right, baby. You see it bounce through that. That's one candle, and it's already ready to go. So your trade could literally be, because you know the trend is going up anyways, your trade could have literally been the low. So high, the low, and then traded through that. And even just on this, on a 1 minute chart, you would have more than likely been stopped out at break even right here, depending on where you put your break even. But that's a 1 to 9 right there. In how many minutes? In 23 minutes, a 1 to 9. Imagine you risking $100 right there. That's $900 that you would have made right there. Just showing example what it is. So the opportunity yesterday, no, that was yesterday also, but that was 8 o'clock in the morning. So if you were trading earlier, that would have been a trade for you to get into, a 1 to 9 right there, easy. So this is where I would have been getting in now, because of the time of the day, right? 8:30, past 8:30, that volatility comes in and wipes out whatever. And now we're trading. My first trade would have been right here, which was 8:42. My target would have been right here, like just looking on like the highs to be taken out, and I'm anticipating the high to be taken out to make a higher candle. Let me make sure we're recording. Cool. And we push in there. So right now it would have been at max potential for yesterday before that fall off. The max potential was a 1 to 6 for me, right? But again, if you were in here from earlier, like when you see how the trends go, because remember, this is from 6 o'clock in the morning yesterday. That's that low. And then once you see that low there, then once you saw it take out this high, once you saw it take out that high, you on a 1 minute could have been looking for trades from here. And what do you see? You see this right here come down and traded through that high. So this could have been your very first trade for the day. And what that would have awarded you, remember, your stop loss is below that low. You probably would have gotten stopped out right here because of break even. But the max potential of that one would have been 1 to 4 at least then. But let's say you're a person that said, okay, no matter what, I'm going to stay committed to the trade and I'm not going to go break even at a certain point. I'm just going to leave it because my rules, which you can create for yourself, says that I can only go break even once it reaches 1 to 5 or 1 to 6. That's just your rules, because now you have access to higher win ratios, right? Now the max potential of this entire trade, because you wouldn't have been stuck break even right here, would have been at 1 to 12. You see how simple that is? Like, and it's easier to follow than most of these other things that you see people saying, because, you know, this is the mechanics of it. So again, that would have been the first trade that I would have gotten into. I would have probably taken a partial out, like probably up here when I saw it close like so heavy. I probably would have taken a partial and then left the rest to run, which eventually I would have still walked away with money for the day, but then this would have came out and took me out at break even right there. Now the joy of this strategy here, or not even strategy, I wouldn't even call it a strategy, it's just the mechanics. The beauty of this understanding is that you can get in at multiple points. So that would have been the first area. Look at this right now from that high. Let me make this smaller. So remember, that high to this low, that would have been my first trade. Where do you see the next one? The next one is from this right here to this low. But I probably wouldn't have, because it came down and closed above it. So I would have left that alone. But this one came from here to this low, left the gap sweetly, and then traded through right here. So that would have been the trade right there. A second entry is what I'm trying to say. The second entry would have been that right there, max potential. This 1 to 4, and it's on repeat. Look at this. So that one here gaps down, and then now I could have got into this trade right here. But me, I don't typically want to get into a trade after it's past the high, right? The higher time frame high right here. I want to get into the trade on the inside of it. So when let me see if I can actually draw this. So when a trade is going up, I want to see if I can make it continuous. So stay in drawing mode, yes. So when I see a trend going up like this, bam, and down. Okay, so it's not gonna do that. Okay, cool. More than likely it's gonna be this then. Let me see. Yeah, cool. So when you see a trend going up like this and it comes down, it's gonna start again doing the same thing, right? And all you want to do is be able to get in when time it passed this. And this would have been where you enter. Your stop loss is right under here, and you're aiming for this target right here. It's very simple. That's the same thing on repeat. And price has a tendency to break back down and then come back and reset and do the same things, because now this is the target high, and it would do something like this and then go back and hit the overall target. So do you see? This is actually how markets move. It doesn't move like how people will tell you, oh yes, it's so simple. Look at it, it's the same thing on repeat. You see? So that's how the market moves. This one right here, if you wanted to, and again, no, I want to trade on the inside. Hi baby. I want to trade on the inside, so I would have the highest probability of that candle being traded through and then going back up. So those are the opportunities that you could have seen yesterday on the 1 minute, on the 5 minute. Pretty much the same thing, but maybe a less of an opportunity there. So here's that same high on the 5 minute that got broken, came up. So this would have been your trade, because you see it came up, gap down, and then that's the gap right there. So you'd have been in right here. Boom. Your stop loss would have been under this low right here, and that would have been your trade. So this one would have actually worked out better, but the time of day would have been 8 o'clock that you'd have got into this trade. And again, I wouldn't have probably been in that one yet. And that would have been a 1 to 11 on a 5-minute chart, right? And that was that lower part. Because remember, see, price even closed right here. So you're confident that price is in a higher time frame trend going up, and all you're doing is continuing that trend on the lower time frame. Very simple. And then moving from there. You know what I mean? So I'm going to break down. Let's do a thing of where we think price is going to be next. So this is live price now on gold. How we could have been in it from this morning. Today is Thursday. Look at this. This is the target top. Liquidity target top. All right. Did it trade through it? Nope. It came and double topped it. And that's where people would have been trying to reverse and get into the trades and see it there. Nyam their food. You know what I mean? Don't trade the things where everybody telling you, cause most of it is garbage. Here it is. So I would have looked on this chart and been like, okay, cool, we did this. So now we taking highs again. So now I saw that. Now I see that the low is here on a 5-minute at least. And now we're taking this trade this morning at 5:35. That could have been that. And right now you'd have been in profit roughly around 1274. Now that would have just been that. But guess what? Now that it came up, so once it surpasses it and it trends, you can choose whether or not you want to follow prices up. I don't typically want to do that because price can just easily return, right? So this is where we're at, live price right now, and it's pushing up. So on a 1 minute, I could easily, you can see how you can get into these trades. Look at this, closes above there. Although it closed back down here, it still doesn't pass this low. So I probably wouldn't have been in this trade. Then I see it close back up here. Once it closed back, see the gap there? Boom. And then I would have get in from right here. Trade through that high. My stop loss is under that low. Even if you were just saying, boy, I only go if I 1 to 3. See a 1 to 3 right there? In a matter of 19 minutes. 19 minutes, you'd have your 1 to 3. And let's say, again, you don't think that until you go to a 1 to 5. See that you'd have still been in this trade right now, and you'd have been up at least 1 to 8 right now live in price. So now what I would be looking for if I'm going to get into this trade right now, based on the 1 hour, I probably wouldn't get into this trade right now. You know what I mean? Because it can eat the next hour in 17 minutes. It can easily come back down and a red candle just come in, eat all of this. You know what I mean? So I wouldn't be doing that because I want to trade on the inside. Remember, on the inside coming out. Here it is. High. Remember? See that? Liquidity target top. It's all the same on repeat. The thing is on repeat. The whole thing is on repeat. High, low. See there? Start from here again. That's my liquidity target top. And that's the high. On the inside is where I'm looking. Because guess what? Fractally, it's the same thing. See there? And then another gap. And then another gap. So all in here is where my 1 minute trades will be. See? Top going back down here. So every single candle top is another one. If you understand what really going on. Every single candle top is another one. If I just go down in here and then go to the 1 minute, you'll see where this one is inside of this one and this one is inside of this one. So you'll understand really quick, like, yo, this thing is insanely good. Look at this now. If I go down to the 1 minute, how that look? Look at this. See the same thing there? And see the liquidity target top right here? See it there? See it there? See it there? Same thing. You break that, gone up, and it create that high. Now it come down. Now you're waiting for it to trade through that. See it there? Same thing. And now you know you'd have been up here. I can't make that no simpler if you can't see that. Watch the video a couple of times at least, and then you'll be able to understand it. But yeah, that's just how it works and that's how it moves. So I want to trade on the inside of it. So I'm waiting now then, based on what I just showed you. I'm waiting now then for price to do something like this. For price to come up here, gap down, and once I see it gap down, maybe come back in here, break a structure, pause, and then I would get in when it rise above this to capture this target top right here. So it would be like this. All right, so this is how it would look. The liquidity target top. I would want price to come back down. Once I see it break a candle, once I see it break a candle, because it's the same thing if you go down to the 1 minute, then now that's a whole lot of different candles. Once I see it break a candle, this is my high, and I'm looking to take this trade. Very, very simple to take it higher. That's all. So I wouldn't get in right there. So now you understand the concept. Run with that, and well, let's see if we can make that really work. Big up on yourself.